Today we're going to be talking about GNUS brands and where I think it can go this week. Let's get into the video. Hi everyone, my name is Zach and welcome back to Finance Bro. Before we get into the video, I'd like to ask you guys to please comment your favorite stock of the moment, why it's your favorite stock of the moment, and to also leave a like and subscribe as it really helps with the YouTube algorithm. And if you want 2 free stocks and you have not made an account with WeBull yet, then go ahead and click the first link in the description and get all signed up. But without any further ado, let's get into our stock for today, ticker symbol GNUS or GNUS Brands. So as you can see here, we actually talk about GNUS brands quite often. The last time I made a video on them was March 31st, 2021. And I basically said that, they had good stuff come out of their shareholder letter, but it's going to be a long-term hold. And that's what we're going to be talking about today is, just why, it might go down in the short term and why it's sold off from about $2 to now $1.60. And just basically give an overall synopsis on where this stock is going long term. So basically in today's video, I'm just going to be going over an article talking about GNUS Brand's plan for the long term. I'm going to be going briefly over their financials and then giving some technical analysis at the end. So here we go. I got the article from Investor Place, just like always. I love Investor Place. The article is titled "Hold GNUS Brand Stock as CEO Letter Maps Out Aggressive Plan." And then a subtitle would be "A Strong Balance Sheet and Ambitious Acquisition Strategy Should Encourage GNUS Stockholders." So yeah, I'm going to be going over their balance sheet as well. It is very strong. They barely have any debt, but we'll get into that in the balance sheet. The author would like to suggest that this is an ideal buy and hold type of asset, and I would agree, but I do think that you can get GNUS at a cheaper price than it is right now, and that it'll be way higher in the future. I think it's going down in the short term. In the interim, it'll probably be, just normal, barely any growth, and then in the long term, I think they have a lot of potential for big growth. And then they bring up that GNUS brands, or they say, could GNUS brands be as big as Walt Disney someday? And they said, I'll admit that may be a pipe dream. The fact that they even brought this topic up, they'll never be as big as Disney. Disney has Marvel, ESPN, they basically own like half of the internet. No, they'll never be as big as Disney, not even close, couldn't even possibly happen. They bring up on their recently issued letter, which we actually did go over already in the last video we made, so it'll be in a card if you want to watch it. They say that they issued a letter that indicates GNUS Brands plans to make aggressive moves and add to the company's growing market share. And this is most likely because they have a strong balance sheet, and now they have the money to go out and get acquisitions that they have gotten, like Stanley's Universe, for example. The author then brings up that GNUS Brands does have a negative earnings per share, and it's understandable. They're at the beginning of what they plan to do, so they are out there trying to make things happen, and they need a lot of cash to do it, so they issued new shares, and that's understandable, trying to get things going. And they do have negative earnings per share, but Hawk's reporting changed his mind apparently. He observed GNUS Brands and particularly CEO Andy Hayward and are on the acquisition warpath. Just as Disney gobbled up Toy Story, Star Wars, Avengers, and Marvel brands, GNUS Brands intends to buy up tentpole assets, which is something we brought up in the last video I made on GNUS, but I think he explains it better here. Basically, Hayward categorizes these assets as ones that they anticipate to be significant businesses and contributors for years to come. So basically, they're saying that they want to get as many assets as they can that are going to last a long time, and basically be TV shows and things they could sell merchandise for, and just have a lot of constant revenue. And then this is an important part. He said that a number of potential acquisitions have met their criteria, and we are currently in dialogue with their ownership. They have a lot of cash on hand, and they need to start acquiring people to get that revenue up, because once we go into the financials of this company, you can see that the revenue isn't quite there yet, but they just have started to acquire a bunch of bigger name, not brands, but bigger name people. Then his bottom line, he says, on a per share basis, GNUS Brands doesn't appear to have a particularly strong earnings, and I can see how some investors might see this as a major problem. But then a closer look at the company that may be in a strong enough financial position to build the next Disney through strategic brand acquisitions. I do not agree with this sentiment whatsoever. I don't think they can be even half as much as Disney, but they can grow to be maybe a tenth of Disney, which would still be a massive price increase, probably to the $10 to $15 range here soon. But as soon as they do that, they'll be able to acquire more people. So, things can snowball and Genius Brands can become huge. But I don't think they'll ever become more than a tenth of what Disney is today. And now just a brief overview of their balance sheet. So obviously in 2020, they took a huge step up. They were at about 27 million in assets, bouncing between 24 and 29 from 2017 to 2019. But in 2020, they raised a lot of cash, and now they have about $134 million in total assets. They have about 108 million in current assets, which means that it can be liquidated within the year. And they only have 7 million in current liabilities. So current liabilities are things that need to be paid within the next year. So they have $100 million in cash left over to just go and acquire companies and get that ball rolling, get more revenue going. They obviously had to issue more shares in order to get this cash, but that is something I'm okay with if it's a company at the beginning of their I'm sorry, I'm blanking. At the beginning of their path to success, I don't know how to explain that. But yeah, so if they are at the beginning of their company, then I'm cool with them issuing new shares in order to create more revenue for themselves for the long term. Income statement wise, this is where we run into some problems, and obviously this is annually. They only had 2 million in revenue last year, and that's actually a decrease of 6 million in the year before that. But they've just been focusing on building new shows, building up this new network, and they're going to start seeing that revenue come in. And if we look at the quarterly, they were at $273,000 in revenue, and then they launched that up to about 1 million. So we can expect, if we see this growth again, to be seen, at least in the 5 to 10 million range in revenue this year. So that'll be good for Genius Brands. But anyways, let's get into the technical analysis. So obviously, if we look at the 1 hour chart, Genius Brands was trading at about $3, in March actually. So that was on the hype of their shareholder letter where they were going to announce all of this, and ever since then it has sold off to about $1, and it's consolidating at the moment. As for support, let me actually go out to the 30-minute. Sorry guys, I'm building a new PC, so we aren't going to have to deal with these long load times. But yeah, I think that we are about to find support at about $1.50. So we could keep falling to about $1.50, but after that, long term, this stock should be going up. It should be going up, and I think that we can see $3 again this year. So I think this can be doubling this year. Long term, 5-year growth. I need to do a bit more due diligence on this, but I do think that long term we could be seeing the $10 to $15 range. But I'm going to do some more due diligence and give a full fleshed out video sooner rather than later. But as for today, we are at a 45 RSI. This is pretty oversold. It's jumping between oversold. This would be really good stock to day trade, going from $1.60 or 25 cents to $1.65. We do see a resistance at about the $1.65 or 67 cent level, and we do see a support at about the $1.60 level. So if we break either of those, that'll determine the trend we see. But yeah, so that's what I'm seeing for the technical analysis, and that's going to be it. As for my overall thoughts on Genius Brands, I kind of already gave them throughout this video, but I do like Genius Brands long term. I don't really like them short term. I think we can be returning to the $1.50 range, or even the $1.30 range if we break below the $1.50 range. But after that, I think we're going to see a upward trend throughout the rest of this year, and then maybe sit at about $3 by the end of this year, and then $10 to $15 at the end, or basically in the 5-year growth. So that's 500% returns That's all I need. This is actually a good company. But yeah, I want to remind you guys that I'm not a financial advisor and that this is not financial advice. If you do want financial advice, make sure you seek it out from a professional financial advisor. But if you are interested in buying GNUS brands and you have not made an account with WeBull yet, what are you doing? You got to get in the pre-market and after hours with us. All you got to do is make an account, deposit $100, and you can get 2 free stocks worth up to $1,850. But that is going to be it for today. If you did enjoy, please leave a like, comment, and subscribe as it really helps with the YouTube algorithm and it shows we're doing something right here. But my name is Zach and I'll see you in the next video.